Good morning, traders. It is Monday, September 28th. We're about 2.5 hours into trading. We've had a nice market move higher, but the market is stalled right at the 50-day moving average. Let's take a quick look at the action. You can see how we had this initial bid check right here. Market was able to find support. Nice 1OP bullish cross right in there. Made some money on the upside. I believe I made 15 S&P points on that rally. Market was not able to get through that 50-day moving average. Couple of tails above body. And we've got a bearish 1OP cross right up here. Shorted the market, made about another 8 S&P points, and since then I've been relatively quiet until just now. I am short the futures, so we're going to be watching the market while I do this video. Why am I short futures? We had this nice upward sloping trend line right here that was breached to the downside. That's one bearish event. We had a bearish 1OP cross right there. You can see it right in there. That's another reason to be short. Secondly, we had a lower high double top. High of the day, lower high. Think we're going to see a little bit of selling pressure in here. And we can put up the daily chart. You can see if we overlay the major moving averages, we'll put up the 50-day moving average. You can see how we just touched that 50-day moving average, and we've been backing off since. That also is a little bit above this downward sloping trend line right here on the SPY. Now, if we could get above this 50-day moving average and close above it, I think that the market might have a chance to grind higher. I am seeing an improving bid in the market right now. Last week, I liked what I saw. We had a test of the 100-day moving average, so let's put that up. And we touched it barely and then bounced right off of it. Friday, we had a very strong rally, and we're seeing follow through this morning. It's all based on the possibility for a stimulus bill getting passed. Nancy Pelosi sounds a little bit more optimistic about it. Steve Mnuchin's been talking about the many meetings that they've had in the last few days. So it sounds like Republicans and Democrats are trying to get a deal done. Small businesses certainly need that help. The second wave of the coronavirus has hampered economic growth, and those companies are needing a lifeline right now. We're seeing initial jobless claims around the 850,000 range each week. That's not good. That's not consistent with a nice V-shaped recovery. We are going to get some jobs data this week, ADP on Wednesday, jobs report on Friday. So those could be a couple of market moving events. We also have end of quarter window dressing Wednesday. So we could see a little bit of market movement there as well. Typically, that event tends to attract buyers. And right now, I'm not seeing a lot of movement on a monthly basis, so I don't think there'd be a lot of position squaring that way. Asset reallocation, kind of the same thing on a monthly basis. If anything, there would be a little bit of buying pressure. So we'll see what happens, but I am fairly bullish in here. This was not a capitulation low. Typically, those only happen when you have long red candles closing on their low, a number of them stacked together, and then a bullish hammer. So for me, this is just a normal round of profit taking off of a overextended buying climax. And I am expecting to come back and try and challenge that 100-day moving average. Perhaps we don't get quite down to it, but maybe down to this 324 level. Any rally after a higher low, I would view as very bullish, and then I would get more aggressive with my longs. What does that mean? Does that mean I'm going to be buying calls? I don't think I'm going to be doing that because I'm not feeling the impetus behind the market right now. But instead of selling out of the money bullish put spreads and waiting for the stock to come in so that I get filled at my credit, if I see that higher low double bottom on a daily chart on the SPY, instead of waiting, I'm going to be banging bullish put spreads out on stocks that I really want to take a position in. So that's kind of a change in my temperament if I see that particular pattern. Right now with this gap higher, with the market still having some nervous jitters, I think that you can day trade on the long side, but I'd be a little bit cautious still with selling out of the money bullish put spreads aggressively. If you can find stocks that have had really nice relative strength the last week, then I think you can sell them below major technical support levels. So we'll be looking to see if we can find some of those today. So let's get on with it. Let's keep an eye on what's going on with the market. And My stop on this trade, here's what I'd be looking for on my short futures trade. I want to see the market continue to drift lower and to challenge that opening gap higher. If I start seeing lots of little tiny green and red candles in here, I'd be closing it down because that would tell me that I don't have the follow through that I need. So as long as we're making some progress here, that's okay. What I would need to be leery of is a long green candle challenging this high right here. So what I'm going to do is I'm going to drop an alert and I'm going to put it almost to that level so that I get a little forewarning. That would be my stop right now. And as the day progresses, if I'm in this short and we just continue to get a slow drift, I probably would just form a downward sloping trend line like that. I want to make sure that we're continuing to make new lows, and that would be used as my trailing stop effectively. If I see a big dip in this 1OP indicator and then a bullish cross, I also would take profits on that short position. Not a lot going on in the middle of the day. So let's see what's moving. Let's see if we can find a couple of stocks that might set up well. I highlighted Apple last night with this big market rally today. There's no chance of really getting filled on it. You can see how it gapped up. It's been able to hold that gap. It would need to pull back probably down to the 110 level for us to have a chance to fill on that bullish put spread that I suggested yesterday. And let's go through our list and see what else we've got. Boeing is a stock that I like today. You can see how it has been strong relative to the market. Market selling off, down, down, down. Stock able to stay right on its high of the day. That is a sign that buyers are engaged. There is a strong bid to the stock. Let's put up that daily chart. Take a look at it. You can see if I draw a trend line down through these upper candles that we're just about above that downward sloping channel or trend line. Let's drop a good till cancel alert. That would be the prudent thing to do. I'm going to click on that high and that high. And now if the stock gets through that price point, yes, I think that Boeing could actually be a really nice long. So let's also draw another one here, and you can see that we have a downward sloping channel here, just like that. And let's also put up the major moving averages so that we see where they come into play. Those will be areas that we can lean on. And here you can see that the 100-day moving average is going to provide a little bit of resistance along with this downward sloping trend line. So we don't have a lot of upside right now, maybe to that 170 level. But if it can get through 170, I think the stock has a really good chance to make a nice move higher. Let's put up that 50-day moving average as well. And you can see that comes into play just above the stock currently. So where would I want to sell a bullish put spread on this? You can see that that low right there is at about $145. That might be a nice entry point for a bullish put spread. Some decent horizontal support there. We do have a downward sloping channel, so I'm going to avoid this one for right now. I think we've got to wait. If it can get above that 170 price point, I think that we've got a nice trading opportunity. Costco after earnings starting to gain its footing a little bit. There's the 50-day moving average coming into play there. At 332, you've got this horizontal resistance, now support coming right in there. Let's call it 330. I don't know that you're going to get much of a credit there because the stock is at almost $350. So need to be a little bit closer to the money to stay inside that 2-week window. Pepsi, choppy. ENPH has had a nice run today. You can see this upward sloping trend line right here. I believe I highlighted that last week. SPCE seems to be getting going. And look, you can see how it's gapped up through these major moving averages today on big volume. That's pretty nice. And we're not too far from that 100-day moving average and that 200-day moving average. So let's take a look at some of these premiums. This might be the pick of the day. And I'm going to bring up the option chain right here. Let's go out to October 16 and let's see if we can find some 1750 puts maybe. See what those are trading at. Click on the bid there, ask here. That spread is currently 13 cents bid, offered at 16 cents. There's only 50 cents between the strike prices. I'd like to get a dime for that. Hey, I can probably get 15 cents for that. That would be a really decent spread. And I'm down to that 1750 level which if you take a look at the 200-day moving average, it's at 1761. I think that's a pretty nice entry point. So I think this is probably going to be the one that I showcase today. Let's see if we can go down even further and get down to that $15 strike price. I'm going to bring that back into play. Let's take a look at the 15. Not quite there. We're going to reset all of these. Take a look at the 15, 14.50, and there you can see that that's 4 cents bid offered at 6 cents. So you're not going to be able to get a dime for that, but that certainly would give you lots of cushion. Let's see where we can get into a nice, safe price point and even let it come down to that 200-day moving average, even slip below it and see if we can get something good in here. Maybe that 16.50, 16. Here we've got 8 cents bid offered at 11 cents. Yeah, I like that one. I like that a lot. In fact, I think that's going to be our trade for today. Now, on a 50-cent wide difference between the strike prices, my max risk on that is 50 cents. But if I can bring in a dime credit, then my maximum risk is actually 40 cents. That's also my margin requirement for it. If I take 10 cents and divide it by 40 cents, the margin I have to put up, that is a 25% return in a matter of 2 weeks. I like that one a lot. SPCE. And we're selling the October 16th, 1650 puts. We're buying the 16s, and we're tucked in right underneath that 200-day moving average all the way down here, almost to that horizontal support level. So really like it at that level. I think this is a good trade. So that's the stock that I'm going to highlight today. Let's take a quick look and see if there's anything else that's shaping up. You can see the S&P futures trade I'm in right now is working out pretty well for me. WKHS, I like the price action on this. I really like it today. In fact, I've been trading it on the long side making money. We had a bullish explosion alert on this right in there. Now, it wasn't a bullish explosion alert that was news related. It was simply volume related and price movement related. I mentioned that to members in the chat room. I said, you trade this as a day trade, but it looks pretty good. I love volume spikes and big price action like this. You can see that the stock is backing off a little bit, but I think overall this is a really nice candidate. And we can also go into the daily chart and we could take a look at where that major support comes into play. I would call it at about $21. You could get a little more aggressive with it, but let's see if there's anything there. So we're going to go into the October 16th. We'll look at the $21 puts, see where they're trading. Pretty rich. You can see there are $5 bid, and this is a fairly wide bid-ask spread on these options. We're going to go down to the $20 strike, and there we can see that that spread is currently 10 cents bid, offered at 35 cents. If I can get my 20-cent credit for that, that's what I'd be looking for. A 20-cent credit represents a 25% return on the max risk and the margin that I've got to put up, and that would be a 25% return in just 2 weeks. Stock has excellent relative strength, and you can see how that would come into play all the way down here where we know the stock has already found support recently, just above that 200 or 50-day moving average. I like that trade. I think that one works out pretty well too. So we've got another one. See how easy it is to find these? All I'm doing is I'm going into my heavy buying list right now. I could take a look at a couple of other lists as well, but I've given you a couple of really decent plays. Pretty quiet day so far. Market's coming in. That trade's working out for me. So in general, still be a little bit passive. You can start to put on some bullish put spreads, just like I've shown you. Focus on stocks that have relative strength. Make sure that you are selling those bullish put spreads below technical support. In this instance, I would want to see the low from the day hold. I would want to see the low from Friday hold. And then at horizontal resistance that is now support at the $21 level, absolutely I want to see that hold. Ideally, the SPY is able to hold a support level at 332 and kind of tread water there for a little bit. You can expect that we're going to see another retest of the 100-day moving average in the next week or two. But if we do, it's probably not going to be there very long. I do sense that there's a market bid building. No, I don't feel that we're going to be off to the races through the month of October because we've got the election coming up, and I think there could be a lot of uncertainty surrounding that, particularly surrounding the election results and how long it's going to take us to find out who the winner is. And perhaps it goes to the Supreme Court. I don't know. I just feel like there's a lot of uncertainty around this particular election. So I don't see asset managers really stretching to be long ahead of the election, especially when the S&P 500 is trading at a PE of 22. Stock prices are fairly stretched right now. But we come back and test that 100-day moving average, I feel a lot better about getting more aggressive with very short-term swing trades, selling those bullish put spreads with 3 weeks or less till expiration on those super, super strong stocks. That's what I've got for you today. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos, because I'm always going to have some decent trades in there, like that WKHS spread. And gosh, what was the other spread that I highlighted? I can't. SPCE, that's what it was. SPCE also looks like an excellent spread. In fact, I like that one better than the other. Thanks. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.